Good morning, listeners, and welcome to the Trade Talk podcast. Globally, equity markets are doing well, especially due to a sharp decline in 10-year bond yields to 4.82 levels and a weakness in crude oil prices. However, the dollar index moved above the level of 106 due to weak economic data in Europe. However, if we go through with the Singapore Nifty, then it is up nominally by 30-35 points. The overall sentiment of the market is still showing a lot of pressure. There are number of headwinds which are actually keeping the market slower. And on Monday we saw the dismissal of 100-day simple moving average, which has triggered fresh selling in the market, and the market reached to the levels of 19,250 during the day. However, on the back of positive sentiments in the global markets, we are going to see higher opening, and we need to see that whether the market manages to regain the level of 18,400 or not. Above that, we can expect further more short covering, which may lift the market up to 19,500 or in the best case scenario 19,600. However, the strategy should be to look for reducing position close to 19,500 levels. Also, if we go through with the oscillators and the put call ratio, then both are indicating that the markets are extremely oversold in the short term. Put call ratio is around 0.54 for the current month, which is an indication of extreme oversold activity in the near term. However, on the dismissal of 19,175, we can expect further more weakness in the market, which will take time, but in the near future we need to keep a close watch on the level of 19,175 and also 19,230, where the market has spent a lot of time since last 3 months. So from here onwards, in case if there is any correction, then 19,230 and 19,175 are the levels. Between these levels we can see some buying attraction. Otherwise, on the dismissal of 19,175, we can expect sell off up to 19,000 or 18,900. However, between 19,000 and 18,900, the market is having excellent support in terms of retracement ratios, and also in the past, whenever the market was moving upward from the lower levels, 18,900 acted as major resistance for the market. So that is now going to act as support for the market in the worst case scenario, and that's the reason if we see the market is falling to those levels, investors should look for adding some long positions with a medium to long term view. But for trader, as we discussed, 19,500 is the resistance level, and above 19,400 we can expect some short covering. For the bank Nifty, there also we saw weakness. It closed below the mark of 200 days simple moving average, which was at 43,200. However, it may spend some more time close to 200 days simple moving average, and on the dismissal of the psychological level of 43,000, we can expect weakness up to 42,500. On the higher side, 43,500 is going to act as immediate barrier, and in the best case scenario 43,750 looks achievable. So these are the levels on which we are going to keep a close watch, and based on these levels we should look for taking trades in the market. But apart from this major indices, in the current sell-off, or if there is any further more weakness, then we should focus more on BFSI as well as capital goods and infra companies. That's all from my side. With this, I am ending today's morning podcast. Thank you very much for listening me. Have a great day to all of you.